So our first keynote speaker of today will going to share his insight on how regulation shapes the growth of digital asset markets and the path towards broad mainstream adoptions. And now, without any further ado, I would like to invite Professor Poon, advisory panel member of Blockchain and Digital Asset Pilot Subsidy Scheme, member of Web3 Task Force, and honorary professor of practice, the University of Hong Kong. Let's give a warm applause for Professor Poon.
Hello, everyone. Thank you for having me here. Today, I'm going to share with you four key themes. Right. So first thing is I'm just going to give you some bird's eye view as to what's going on in the Hong Kong regulatory landscape. So for those of you who are new to Hong Kong, that may be a way for you to find out what are all the activities that goes on. Second thing is I will give some of the audience who are new to the cryptocurrency or digital asset market as to what's going on a broad scheme. Then I will spend time talking about two killer apps. One of them is stablecoin. The other one is the real-world asset tokenizations. So with that, Hong Kong actually started the journey way back in 2022, where the first announcements of the Web3 policy take place. Since then, I think sometime middle of this year, the LEAP frameworks kind of come into place. The LEAP framework essentially focuses on having multiple regulatory bodies to work together and has less regulatory arbitrage, focusing on helping and building infrastructure for the industry, and at the same time, also expanding the type of product, specifically tokenizations. And early this year, SFC, which is the regulator responsible for the stock and future exchange, that announced also their Aspire strategies, where again, it re-emphasized the importance of having different type of products, investor protections, and building the necessary infrastructure to support the Web3 ecosystems. Early this week, Hong Kong IMA actually announced the FinTech 2.0 strategies. Again, there is a very strong emphasis on the tokenization aspect of finance, which is very important for our banking system and all the debt issuance. I would like to summarize some of the significant achievement which Undersecretary Joseph Chan just talked about. For example, Hong Kong by now has 11th licensed virtual exchange. The stablecoin ordinance was passed early this year and currently in effect as of August. There is also multiple crypto ETF being issued with the latest approval of using Solana's. Staking services is now allowed in some of the crypto exchanges. And early this week, there are two very important announcements, is to incorporate some of the offshore order books into Hong Kong exchange, which is a very important part of building the volumes within Hong Kong. And the other part is the allowance of not traded virtual asset to be custodized also in Hong Kong. It allows Hong Kong to be one of the crypto custody hubs, which we have probably one of the highest security standard among the world in terms of virtual asset custodies. And lastly, as Rocky and also Joseph has mentioned, Cyberport has endorsed 9 different projects ranging from RWA, securities, payment and stablecoins, and also on decentralized identities. With that, I'd like to switch to a different theme that focus on cryptocurrency. I work with a lot of industry players, traditional market, and also in different fields, legals, etc. And oftentimes they ask a question as to say, is cryptocurrency a fad or is it going to stick around? So with that, let me kind of dive into some of the details. If you look at the top 5 cryptocurrency, which there are thousands of them, the current market cap is close to 3.6 trillion. Now, some of you may wonder, what does 3.66 trillion means? It's equivalent to the German economy. That's how big it is. Now, if you were to put in perspective of the top cryptocurrency around the world, which include Bitcoin and Ethereum, and rank it amongst the top equities around the world, such as NVIDIA, Microsoft, etc., Bitcoin actually ranked 7th among all the world equities. And Ethereum is larger than Disney, Home Depot, which are both listed in the Dow Jones. So that's a very significant part of these cryptocurrency. The other part is in terms of the trading volumes. If you look at the trading volumes, on average, the monthly trading volume is around 1.5 trillion. Now, you might translate to as to say, what does 1.5 trillion means? If you look at the global equity exchange, it ranked 5th compared to the New York Stock Exchange, NASDAQ, Shanghai Stock Exchange, and Shenzhen Stock Exchange. The trading volume is even higher than that of Hong Kong Stock Exchange. The other part I want to bring you to attention is that since last year, there is introduction of crypto ETF. And one of the requirements in the United States for crypto ETF is that it has to accumulate actual crypto. Now, with that, if we do the calculations, the actual crypto that is being custodized under the crypto ETF is close to 6.1% of the total Bitcoin supply. Now, given Bitcoin supply, maximum, most of you are aware of, is around 21 million. Currently, it's running on 20 million plus. That's pretty significant, and the trend is on the rise. What it means is traditional finance has been moving into crypto one way or other, whether it trades crypto directly or trade it through traditional financial assets such as ETF. I think there is no doubt that crypto is here to stay. It's becoming too big, too important to fail. So I hope that by the end of today, you would realize that cryptocurrency, digital asset is here to stay, and it is not going to go away soon. Second, the third thesis I want to focus on is stablecoin. Now, stablecoin was created as one of the transactional currency on blockchain. Given that fiat exchange with cryptocurrency is relatively efficient, it was created many years ago to facilitate that. Now, since then, stablecoin has been used in many types of applications, including some cross-border, and unfortunately also used by criminals. To give you some optics, stablecoin circulation is around 293 billion as of now. And the trend has been growing without stopping. And by far, the concentration focused on two key stablecoins. One of them is USDT, which is launched on different blockchains. And the other one is USDC, also was launched in multiple blockchains. Now, one of the key characteristics for the growth of these stablecoins was the liquidity availabilities. That means it is available across many, many different markets, and it is very easily traded. Some of the policy in Hong Kong may have some restriction on holders, and that is something that I hope the regulator will look into to allow the sizable growth in the future for stablecoin to be licensed within Hong Kong. The other, on the macro aspect, I want to bring you to attention that a lot of stablecoin was backed by solid liquidable asset. Now, many of you know that this asset was usually backed by US Treasury, but little known that the requirement of liquidity, the Treasury that was backed by it is usually just short-term marketable Treasury. And stablecoin is already constitute around 4% of the worldwide short-term US dollar Treasury. Now, there are a lot of projections that stablecoin will be moving up to close to 1 trillion or 2 trillion in terms of circulations. With that, you can imagine that it become extremely sizable players within the US short-term Treasury. And that's why you see that the US Genius Act was passed so rapidly, because as the geopolitics evolve, less sovereign states are holding US debt, and they need to have mechanism to create that demand. On the other side, stablecoin, as I mentioned, was also used in a lot of criminal activities. Oftentimes, when I talk to innovators in the Web3 space, they were very upset that the government was moving so slowly, and that what they do not know is the government was not only concerned about innovation, but also about how these innovation was used in illicit activities. And stablecoin has been one of the growing area in use for money laundering and various type of illicit activities. Just to give you some optics, that I work with one of the tracing company in Hong Kong to conduct a field research. The average virtual asset OTC, it's around 100 million per day being transacted in Hong Kong, and that's in its US dollars. And depends on how we do the illicit activity taggings, approximately 10% are somewhat related to money laundering, dark market type of capital that is flowing through. Also, the Hong Kong Police Force has released some of the reports in terms of how crypto is being used in illicit activities. On average, there is a daily 79 case reported. That's a pretty substantial number. So while you are doing all this innovation, what you need to pay attention is that how criminals are also using these innovations, and instead of just proposing a solution to facilitate what you're doing, also help the regulators and the law enforcement to solve some of these problems. Now, what I see going forward in terms of stablecoin growth and challenge, first thing is, because majority of the stablecoin was issued in US dollar and is backed by US Treasury, there is sufficient supply of US Treasury to fuel the growth of circulation of US dollar stablecoin. That is not necessarily the case for non-dollar-based non-dollar-based stablecoin. So for example, Hong Kong and China has less than 5 trillion public debt in renminbi kind of floatings. With that size, it is a bit difficult to grow on the non-US dollar-based FRS. Second part, it has to do with the business model. When I see some of the stablecoin issuers listed in NASDAQ and the valuation it commands, it almost shocked me that the revenue source is nothing but interest rate derived from the circulations. And without that, the revenue actually dropped significantly. And I'm very concerned with some of the business model for stablecoin company as to whether they create the circulations and how the use case can help to improve their circulations. The third part I want to emphasize on is the persuasiveness of liquidity. That means that how often or how many venue can you actually exchange these stable coins. And if you look at the existing two top stable coins, they are all over the place. If we try to restrict the use, then it makes it very difficult to grow the circulations. And lastly, very importantly, the illicit activities that we are trying to prevent while you are building the new innovations, also pay attention on building the regulated technology, on monitoring, identifying, and investigating how these activities are being conducted. Next, I want to switch over to RWA. I worked in Silicon Valley many years ago, and I work with a lot of startups. Oftentimes, when they come to me for a wonderful business plan, I always wonder, is this a solution looking for problems? And RWA, on the surface, when they first come to me, seemingly is kind of one of those things, that it is more a solution looking for a problem rather than trying to solve some really immediate problems. With that, let me just give you some idea of what the RWA market is as of now. Now, the RWA market is approximately around 35 billion as of now. Most of them actually come from, surprisingly, private credit. Now, if you dive into the details of what exactly is a private credit, it's kind of like peer-to-peer loan in disguise. And the rest of them come from treasuries and other type of markets. I have seen numerous projections as to what is the RWA market in the next 2-3 years. And let me throw a wrench into the game. The opportunity is close to 245 trillion instead of 1, 2, 3 trillion that I have seen. Why? Because financial assets are actually best suitable for RWA. And if you look at the world asset cross from equity, government bonds, corporate bonds, all these elements you add up is close to 360 trillions. And that is growing at a rate of approximately 20 trillion per year. Now, can RWA create a better, faster, cheaper? Now, I don't expect you to read the fine prints of the details, but oftentimes, whenever I look at business plan, the key thing I want to look for is this solution making things better, faster, cheaper? On the faster angle, definitely blockchain technology provide immediate and guaranteed settlements. And that is definitely a major benefit of faster. To a large extent, on the cheaper part, I would say RWA could potentially be a substitution for majority of the passive ETF today. Imagine what ETF is doing. It's doing nothing but a fixed accumulation based on the formulas. And that is best done by smart contracts. So that actually creates opportunities whereby you can reduce the fee and provide much more faster, better executions on some of these financial products. Now, I also want to look at from a point of view of what are the type of hurdles that is unrelated to the regulatory aspect. As I have shared with you, Hong Kong government has already paved the road in a lot of regulatory direction as to how it facilitates RWAs. And what I want to share with you is some of the sticking point that whenever I look at business case for RWAs, some of the things that I got really uncomfortable with. And oftentimes today's RWA more or less focus on things that they issue without a lot of liquidities, or things that they issue without the complete cycle of how a financial product should be. And I'd like to highlight probably a couple of items to discuss in here that is worthwhile for the innovators to think about. First thing is the fact that whether tokenization creates economic value. When you fractionalize an underlying financial asset, the value of the underlying asset does not change. That begs the question as to where the values come from. And of course, as I have mentioned previously, one of the examples is if I can build that over using a traditional ETF, then I might be able to reduce the fee and reduce the cycle time. Those are values that could possibly create it. Another aspect of RWA is the ownerships. We know that a lot of virtual currencies were transacted over blockchain, and the transfer of ownership was merely identified by cryptography algorithms of ownership transfer. Now, when you wrap it against a real-world asset, the ownership transfer in the real world become questions as to whether a transaction happened on blockchain indeed can do the same claim in the real world. So that, again, is a very significant issue that innovators must address. Without going into details, I'd like to touch on the last point on liquidations. Oftentimes, when an asset in the traditional finance were in trouble, there is some kind of a liquidation procedures in cleaning that up. And most of the RWA project that I have seen does not provide that vehicle or capabilities in cleaning up their asset. Now, when we look at decentralized finance, we know that there are tremendous mechanisms that is already built in how to automatically handle these in a well-economic aligned way. I love to see more of those happen with the RWA going forward. Last word for the innovators. You are going into an area where no one has gone before. And this is one of the biggest challenges because you are at the dawn of reinventing the new capital market, the new financial industry. Whether it will be successful or not, no one knows. But be patient and be perseverance to go through that journey. And the word for the regulators, I think oftentimes when I deal with the regulators, the comment is, oh, things are working. Let's not break it. Let's use the same rules of what we know before. And that may or may not work very well when we are dealing with new innovation, especially when blockchain actually helped to solve a lot of problems already that traditional finance cannot solve. Now, fairly speaking, it also introduced some new problems, but I like to invite some of the regulators and the policymakers to be more open-minded into looking at how these technologies can help them to solve the problem rather than purely avoiding it and applying the same old rules. Now with that, I conclude my talk, and thank you very much for having me here.